Hey, what's up, everybody? Welcome to, let me just straighten this out. Much better. All right, welcome to the third installment of Ask Matt. Today's format, it's going to be a little different. I'm going to talk about a market recap pretty quickly. I've got some other interesting news about SPACs and IPOs and how they're performing against the market. I'm going to talk about my morning prediction, which is on the right side there. If you're part of my platform, you saw exactly, you know what, let's just get right into that. So if you're part of my platform, I tweeted out this morning, I was a little upset about Monday and Tuesday. The markets kind of threw me for a loop because I know there's demand. I see the demand. Demand is not done yet. So I highlighted, if you look to the right in the Dow, in the NASDAQ, what exactly we're seeing. So just to simplify, every time the market peaks, which it did on Friday, there's a retraction. So it happened to last 2 days instead of one this time. It's the first time we had a 2-day stint where the market went down all of April, which is why it caught me off guard. It was also pretty drastic Tuesday morning. But if you look at my tweet this morning, I basically pointed this stuff out that we should have a green market today. Futures were down pretty horribly this morning. And if you didn't see what happened when the market opened, it dropped steep, a continuation of yesterday. But if you listen to my prediction, if you're on my platform, you know we spoke about there is demand, there is volume. Volume on Monday and Tuesday in the market was so light, which is why I really stood true to my prediction this morning and thought we would be correct. Although I was cautiously optimistic, which is a word that I use. Cautiously optimistic because I never guarantee anything. There are no guarantees in the market. There is manipulation in the market. All right, so I'm glad I just wanted to cover all that and tell you guys what I was seeing. I feel better about myself because I was reading the market and I couldn't understand why we had bloody yesterday and it fell off the cliff. I understand Monday the retracement, and now the retracement on Tuesday makes sense. There's a lot of profit taking out there, which is what I tell my platform members. Again, if we make a good trade and we stick some profit, put it in your pocket. Let's go for the next trade. Let's wait for the next dip, okay? Let's remember, entry point, no matter whether you're talking about stocks or options, is always most important. And yes, I will get to my options lesson today. That's one of my main goals today, just to simplify. I get so many questions on the side, about 30 of them. And it's, did I do this right? And someone's trying to sell a call option or buy, and then somebody else bought a put option instead of a call option when they realized it was 30 minutes after I gave the alert. And as we know, Matt's rule, a stock, once I give an alert, goes down about 20 minutes after. So the person actually got out with a quick 6% profit and then got on the correct side of the trade and killed it. So a little luck helps, but it's better to know what you're doing when it comes to investing in options, and options are extremely dangerous. So please be cautious. So we spoke about the market. Let me just tell you about where the market sits right now from the all-time highs of certain industries or certain, stock topics. So let's go with SPACs. You guys love SPACs. Oh, this is great. CCIV, XL is great. I mean, there are just so many SPACs. There are like hundreds, there are probably thousands of SPACs. All right, so let's go to the SPACs. SPACs from their all-time high, which is earlier this year, probably in January or February, are down cumulatively 32%. So if you think you're alone or your SPAC is down 50%, sure, some are going to be down 50%. Some are going to be down 20%. Some might even be up. But okay, SPACs are down 32%. IPOs, all right? Everybody likes IPOs. You get in first. Initial public offering. I'm going to be part of this IPO. IPOs are down 20%. That means you think you're getting in good, and you're not. They're down 20%. All right, let's move on to another category. Pot stocks, 420. Was yesterday? Yes, it was yesterday. I probably smoked too much. I don't know. But it was yesterday. So how are pot stocks doing this year? I mean, I said, let's run away from Sundial a long time ago. Then it went to $1. Then it went to like 80 something cents. I would still run from that stock. Pot stocks, what do you think they're down? They are down 42% from their highs as a group. 42%, 420, because percent, you always add a zero in there. You got 420 yesterday. Stay away from pot stocks. I speak about pot stocks all the time. And I tell you guys that they're opening up these places, but yet I could get the same product that they're selling at their stores for a third of the cost. So why would I actually purchase in their stores? So yes, there will be some pot stocks that are good and they're breaking technology, or they're able to extract THC at a faster rate, or whatever it is. But anyway, so let's just continue on with the list. Lithium battery stocks, okay? Like the ones that exploded off, PLL, I think, went from, I know it is a $28, $32 stock all the way to 35. I think it was like 78. Then it went to like 60 something. I don't know the stock, so I don't follow it. But those stocks, lithium battery stocks, off 18% this year. So we know green energy is struggling, all right? Real quick, my favorite green energy stock, Canadian Solar, CSIQ. I'm not touting it. I'm not saying this. I'm saying that's my play when it comes to Neo, Blink, Plug, any of those stocks. All right. I'm actually added Plug to my watch list. I don't like Plug. I don't like Blink. But if I'm going to choose one of them, I think I might be edging towards Plug. I spoke about what I think of Blink before. I live in Miami Beach. I'm pretty sure it's 3 guys in an office in Lincoln Road doing all these sales and whatever. They have like absolutely no revenue, yet the value of the company is in the billions, okay? So I made profit on Blink 6 times that I've traded it. I've traded it 3 times positively, starting when it was a little under $7, and I rode that all the way up to probably 18 or 19. I sold it, went up higher. I shorted it 3 times using put options. It was great. There are some stocks I'm very good with. Tesla, I have a good winning record against. I think I'm 5-2, and we know Tesla options move quick. But I don't want to get sidetracked. So let's move on. I wanted to talk about a couple different stocks today, see where they finished up. Let's talk about Fisker first. Jim Cramer put the curse on it, what have you. He can't change the money. The smart money was going to Fisker. It started yesterday. I only noticed it this morning. I mentioned it pre-market to you guys. I mentioned there was volume, there was demand. It started yesterday, even though the selling was huge yesterday, huge sell-off. Somebody started taking position. Could be Cathie Wood, could be other institutions. Who knows? The demand was there. That stock was beaten down. That's a SPAC, right? Again, so I entered into it this morning at 13.29. It finished at 15.15, up 17%. So, I mean, excellent. Very happy. My second favorite stock, Tiger. Tiger was beaten down because Futu made an offering, and Futu was like 175, had major demand. They run together. Futu made an offering. Yesterday, it dropped like 21%, and Tiger followed suit and dropped 18%, even though they didn't do an offering. I mean, it blows my mind, but nothing surprises me in this market. If somebody relates to stocks like a Netflix and a Roku, Roku suffers the damage of Netflix not performing. However, if you know me, you know I like Roku. Everything streaming has to go through Roku. I've been doing my research. So we're dipping. It's following Netflix. But if anything, I'm probably going to be buying at these levels. I thought about selling my position because we entered into it at $327 is my average. I think I bought more at $303, maybe $297 as well. I have 3 positions. And if you know what I mean by my positions, I use my 25% rule. So I put money on the side, $1,000 or whatever it is, 100% of my money that's going to this position, and I take 25% and I make it my first purchase. When the stock goes down, I use my 10% rule, and then I purchase another 25% position. It's the best way that I could think of averaging down. It makes red days not so crazy. You don't have to guess and do guesswork about, hey, when is it going to bottom? What am I buying or whatever? You're buying it 10% down. Then you take those 2 positions, you take your average, and if it goes down 10% again, you're doing, you know what to do, and you're not doing well because the stock's going down. But that's, again, you have to have plans. You have to have strategy. If you jump in with 2 feet, you get hurt. It doesn't matter options or stocks. If you think you're calling the bottom, I know how to call bottoms, all right? I'm the best at it. And what happens every time I call a bottom? The 10 or 20 minute rule for Matt. You wait 10 or 20 minutes, it goes down. All right, I'm going to speed this up because I do want to get your questions. I do want to get to the options format today. So what other stocks do I want to talk about? EBON. The shorts are gone. It's at $4.28. I still think it should be north of $7 sometime soon. That's just my opinion. I think Futu's being beat up. I know the offering's at $130. I think the stock's still at like $132. I'm a buyer. I believe as soon as they announce the offering is closed, that it's just going to go up a ridiculous amount. They'll announce the offering is closed. It'll shoot up 5%, and 5% of 132 is what, like $7, something to that extent. Plantier. I told you guys 2 days ago that I like Plantier. I got into soon. The options that I mentioned I got into, I bought at 60 cents. Then I bought more at 48 cents, and I sold them today for 77 cents. I planned ahead. Now, I'm not going to tell you the options date. If you're following my platform, You know the position. Some of you told me you held on to some. I held on to some on one account. I wouldn't have. I meant to sell every option position I had yesterday, but I held on. And because I did, I averaged down again at 48 cents. And then we got a nice pop. I probably could have held on later in the week. I think Plantier will be over. It's 22.64 now. I think it'll be higher. D-Dog, man, again, we got screwed. There was profit taking. There was Monday and Tuesday, red bloody days. It was tough. Same with Ford. Again, it was just a bad timing play. If you got into Ford this morning, the $11 calls, and you bought them as low as 28 cents, you could sell them for 72 cents now. And we talk about you just need to have the right stocks on your watch list. Sorrentino Therapeutics, SRNE. Again, I bought in too early at 768. I averaged down when it was 748. I bought more. So my average, I think, is 759. We're up to $7.70. Canadian Solar, again, another positive day, $44.50. Now, remember, when I gave that alert out, again, I bought 3 positions the same day because it went down like 6% after I gave it out because the markets were bloody. But all 3 positions are green. And if you follow my rules and follow my alerts, you're green as well. Let's see what else we got to talk about. Carnival had a great day. Again, it's a rebound. Quantum Scope, QS. I mentioned when this was shorted and it would probably go down to 30. The 2 bloody days yesterday helped with that stock. But it looks like, they put 8.47% to the upside, which is a good sign. Mara, again, Bitcoin was down $1,000 today, yet Mara was up 4%. So you guys on other days said, well, Bitcoin's going off the charts. What's happening to Mara? What's happening to Riot? It's because it's buying and selling. It's supply and demand. And the institutions, they told you Bitcoin was going down. Nobody listened. Bitcoin dropped. And the stocks plummeted, like I think over 40% in probably a month's time. I didn't think it would be so drastic, but I mentioned earlier this week on Monday, I was looking for the bottom. Guess what, people? We found the bottom for Mara and Riot. Does that mean jump into them right away? No, it means we only purchase on dips. We follow the rules. We know exactly what we're doing. Does that mean the same for SOS and FTFT and all those other guys? No, I like best in class. I like the best in class. Why? Why does he always say best in class? These other ones are cheaper. These other ones can move more. Okay, why do I like best in class? Because who moves the markets? Institutions move the markets. Hedge funds move the markets. Big money moves the markets. Big money doesn't want Joe over there. He wants the center fielder that's the drafting, number 1. He wants the best team. Everybody wants the best team. You go to sports teams, they want 3 superstars. Remember the great 3 guys in Miami where I am? Then they did it in LA. Now they're doing it in New Jersey, or actually Brooklyn. Let's get it straight. It should be the Brooklyn Nets. If I said New Jersey, I apologize. I'm from the Northeast. But look, they're bringing superstars in. Yeah. So my prediction, it's Nets Lakers. I'm a Laker fan. I love it. I've been a Laker fan since I was real young. At my bar mitzvah, I had Magic Johnson on my table as the centerpiece, these great things. Lakers were awesome. James Worthy, Byron Scott, getting off topic. Back to topic. Stocks. So let's finish it up real quick. Then I can go into options. All right. Jumia finally made a 7% move back to $30. I mentioned it on the way down. We could see $28, $29. Okay, well, $30, it's a decent number to jump in. So I actually have a couple positions, but I don't have a personal position other than alerts on that. But I'm thinking about taking some personal money because I mentioned 65% of my money on the side and taking a 25% rule position with whatever money I'm allotting to that stock, okay? So I tell you guys to follow my rules. I follow my rules when it comes to stocks. I sometimes cheat with options, and I share you guys the pain. So I'm going to share a quick story because I'm not the best. AI is the symbol. CAI is artificial intelligence. I thought I saw the move last week. I lost 80% on one position. I crushed my options account with this position because I doubled down and I was wrong. The markets were frothy, but this stock was profit taking. So it happens to all of us. So now I'm starting again with my options and I'm going to turn a few thousand into like 60,000. It's going to happen within a couple of months. And I'm going to do it the right way. Well, my point is, if I bought myself the 1 week extra time, I wouldn't have dropped 16,000. I only would have dropped 8,000 on this one trade. Okay, so always buy yourself the extra time. I got cocky. I've been calling the market on point for so long that I said, you know what? If I'm wrong about this, not only am I going to double down, I went like 8 times down. And then I was extra wrong and ended up selling for loss. That's how I lost so much money. But again, if I did the right thing and gave myself even the extra week, I probably wouldn't have been on tilt. If anybody plays poker, they know what that means. But I was on tilt, and I'm like, I'm going to buy more. 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 Shit, I need to sell. The market's just capitulating, So I made the wrong decision. We all make the wrong decisions. So some of you who follow me tell me, I went all in on this play or all in on this play. It sucks. We make the wrong decisions sometimes. We could do two things. We could cry about it or whine or be upset or I hate stocks. I hate the market. Or we could start over and say, okay, where's my baseline? How much do I have left? How, think ahead. How am I going to divvy it up? I'm going to follow the rules this time. So even if I want to play options or something dangerous like that, and I only have $1,000, 25% rule. First position in whatever option you choose. We buy on the dip. You purchase it with $250, whether it buys you one contract, two contracts. Okay. I'm not talking about stocks yet. Let's just move on to the options since I'm talking about options. Okay. Number one, options are dangerous. Options are extremely dangerous. I just told you my example. I'm great with options. You guys see my spreadsheets. I got like 15 out of 20 winners. The returns go from anywhere from 30% to 267%. But yet my options account is down because I just told you with AI, I was wrong on the dates and I didn't give myself the extra week and I broke the rules. So back to the rules, okay? Options are dangerous. Rule number one, like stock, we enter at a 25% rule. So if you set a specific amount aside for this option play, whatever it is, say you have $2,000 set aside, your first purchase into this option play will be $500. Next, we plan in advance. What does that mean? We're planning for the dip. I am going to explain options and simplify it, but I need to speak about the rules first before we jump right into it. So we plan for a dip. So if we're watching a stock, we want it to go down 3%, 4% on the day. We know these stocks move quickly. Maybe it's a 6% down. You're looking for a real bargain. So you figure out the stock price. You're like, okay, it's a $10 stock right now. If it goes down 6%, it'll be $9.40. I'm looking at this option, so you figure out if the option costs you, $2 or $200, it's going to go down 60 cents. You're going to take this down about like probably 40 cents. And you'll be like, I want to pay $1.60 or $160. So the difference right there on entry point is $40. So when that option goes back to $2 per contract or $200 per contract, which I'll explain, instead of being even because you just jumped right in and you paid the $2 ask price or you set a $2 bid price, I don't care. That's not a discount. A discount is when you buy it for $1.60 or $160 per contract. So when it goes back to $2, you're thinking, okay, it's not that much, whatever. It was just moved like this. I did the wrong thing today. But that 40 cents or $40 per contract equates to 25% profit. And that's why we're here. We're not here to be right about stocks. We're not here to be right about whatever we're saying. We really don't care about that. We're here because we want to make money. It's great that we're right, but if you got the best entry point and the best exit point when it spikes, and let's move on to my next rule. So you have to plan ahead. Say you have option contracts, and again, I'll explain how to purchase them. But say you have option contracts, you have to plan ahead. You have to say, if this stock goes up 5% today, what is my option going to do? It's going to go up to this level right here. So let me put my sell order in advance. The market hasn't even opened. I'm assuming that stock might go up 5 or 6% if it spikes today. So let me plan ahead. My option will be worth, instead of $4 or $400 per contract, it'll be worth $520 per contract. So let me put in my ask. You type it in. You hit submit order. It's still 8:30 in the morning, so it says that you're in the queue. You're still 20% over where the price is or closed at. So you're waiting for that spike. You're planning ahead. You know that if you sell that contract for $400 or $520, that you're going to be happy with the exit price. Even if it spikes higher, it doesn't matter. The point is to plan ahead with where you're comfortable in. So we plan ahead when we enter the right way. We plan ahead when we exit, okay? Okay, now we're going to simplify options. So what are options? Options, or an options contract, because that's how you purchase them, is the option to buy 100 shares of stock in that company at whatever strike price it is, or to sell. If you buy a put, you're buying the option or the right. Okay, it's called an option, but you're buying the right to sell 100 shares of the stock. So if I bought a GameStop put because I thought GameStop was going to go down, for instance, and the stock was 174, and I bought the put, like I gave an example on Monday, which I almost entered into and I'd be profitable, but I got scared because I don't like GameStop. It's a meme stock and it could do anything. The stock was $174. I thought it would go down. I selected a strike price of $170, meaning, so I said, I want the option or the right, no matter where the stock goes, when the contract expires, to sell 100 shares at $170. So I'm hoping it goes down to $120, and then I make the difference. 100 shares times the $50 difference, okay, is a $5,000 profit from one contract. Okay, now GameStop didn't go down to 127 and I didn't buy the contract, but I'm explaining what an option contract means. So again, you have the right to buy 100 shares or to sell 100 shares. So let's talk about a long call. Let's talk about strike price first. So strike price, I speak about a rule that you must buy in or at the money. What does that mean? Let's take Tiger, for instance. Tiger, I think, closed at $18 and maybe 4 cents TIGR if you want to follow along. And we'll look at it. We'll look at it together if you like. So I'm going to wait a second. If anybody wants to follow along, please open up your computers, open up a side window, open up Tiger. It finished at $18.11 today. Okay. So we pick a strike price. I say in or at the money. $17.50 is my strike price. Then when does this contract expire? When does my right to purchase or sell or buy or sell 100 shares, when does that expire? So the next options date. So you go to options and you look at the next options expiration date, which is 30 days from now, which is May 21st. So again, you could have pick May 21st, you could pick June 21st, July. I mean, every month there is an expiration date. Sometimes if it's a more popular stock or a more popular option, there are expiration dates every week or every other week. So again, it really depends on the stock and the volume, but let's look at Tiger, for instance. So I suggest choosing an option in or at the money. So we look at the $17.50 strike price, and I like Tiger because it's my favorite stock of the year. So I'm using it as an example because I think it's going to be at $28 soon, then $35, probably $44 at some time this year. I'm going to be holding this stock throughout the end of the year. Every time they have earnings, I expect it to boom. Okay, so let's open it up. Go to the $17.50 strikes. It's right here on my phone. I don't know. Oh, there you guys can see that, hopefully. There it is. So I hit the button to get the details on it. I believe you need level 2 with whatever institution you're trading with. I'm not sure. So then it comes up, and we look at today's activity. So this one option, this call option, it's a long call to buy 100 shares at $17.50 by May 21st. Now, I never execute my options. I never actually buy the shares. So all this is me but using an option is letting me lever my position. So instead of costing me for 100 shares of stock $1,800, it's going to cost me $255 to buy a contract. So $1,800, $255. $1,800, if I'm right about the stock, I might make 20% on it in the next week, 2 weeks, 3 weeks, 20%, 25%. Still a great return. Happy, safe. Stock is safe. If it goes down, I can use my rules. Options, I have a limited amount of time. My options expire May 21st. If you want to be safer, you buy out an extra month. You pay a little more, but it's worth it because it's your money. And if you're right about the stock, you're still going to make money in the options. Okay, so let's go back to this option here. And let me just tell you, the day range for the option was $1.95, meaning you could have bought the same option for $1.95. Now, it's very tricky. It says $1.95, but you don't actually pay $1.95. You multiply it by 100 because you're getting the right to buy 100 shares. So that becomes $195. So it's $195 for one contract. If you're going to buy a position like this, you better have at least $800 in your account or $800 for this one position because you have to follow the rules. You have to know how to average down correctly. So for options, I'll just slip this in. If an option position that I'm in is down 40% and I'm still convicted to that position, meaning I'm not thinking about selling, I actually think I'm right about the stock, I picked a bad time. If it's down 40% or more, I will buy a second position. I will average down. I don't use 10% like my stocks. I use 40% or more for options. If I see the option or the stock is going down and I don't think it's bottomed yet, I think it's going down, it hasn't bottomed. and I'm at 40% down when it's here, I don't buy it at 40%. I wait till I'm down 60% or 70%, and then maybe I buy 2 options. So then I have 3 contracts. That is the proper way to average down. Now, people, if you do not average down, you will not be a successful trader. Yes, I'm not a financial advisor. I'm a very smart person who sees patterns. I read volume and demand, and I try and share that with you guys, okay? But please, do your own due diligence, okay? I speak through transparency. Those of you who followed me, if you're new to YouTube and you just found me, congratulations. It's like your birthday because I give information for free. I have a platform, but I give you information on what I'm seeing in the market, and I measure demand and volume, and I see patterns, and I see them before the institutions. I used to work for an institution. There's another video about that. Don't want to talk about that today. In fact, I'm using a lot of time. We haven't got to your stocks yet, guys. So I want to talk about your stocks, but let's finish up options first. All right. So hopefully you guys understand. Let's just recap. So with options, you pick a stock, whatever it is. I'm using Tiger for an example. Next, you pick a strike price. I like in or at the money, which means the strike price is below the current price of the stock. My strike price is $17.50. The stock price is $18. It's considered in the money. So it's worth whatever the difference is. Right now, that option would be worth 66 cents. How do I get that? It's the difference from where the stock finished at $18.11 and my strike price at $17.50. Okay? So I'm sorry. That is 61 cents. I might have said 66. 61 cents. So you have 61 cents of value, and then the rest of it is the time frame. So meaning today's date is April 21st. My option doesn't expire till May 21st. So I have 30 days to make as much money as possible. When you have a long call option, the stock can go through the roof. You don't care. The more it goes higher, the more money you're making. Okay? There are different positions, and I'll talk about that on how you can lose money. Let's go to put options. Okay, so let me finish up with Tiger. So I happen to think Tiger is going to, like, say, for example, $28 by May 21st. It means I have the option to sell the stock at $17.50. It's $28. That means my option, my one contract is worth the difference, $10.50, which would be $1,050. So if I buy this option contract for $2 or $2.50, and it goes up to $28, that means I will get $1,050 for my contracts, which is 500%. Now, what happens if you forget to sell your options contract? Most likely your platform will sell it for you unless, now here's the unless, say you're trading a big account and you have $100,000 in cash on the side. If you have enough to buy 100 shares, say you have one contract and this stock, for instance, is $18, but it's $28 by May 21st. Let's say $28. So for you to buy 100 shares of a $28 stock, you need $2,800. If you have $2,800 in your account, free money, tradable money, and you forgot to click, do not execute my option position, meaning sell my options position. I don't want to own the stock. So if you forget to click that, because there's a button in every platform, I never execute options. I never want to own the stock. I only use it as a margin tool to exponentially gain profits if I'm correct or lose if I'm wrong. So anyway, if you do not click that button and you have $2,800 on the side and you have one options contract, your platform could purchase you. You'd only need $1,750 because that's what your strike price is. Your place, if you have $1,750, you have one contract, they might buy you 100 shares at $17.50. Now, the great thing is, even if they execute and buy you the shares, now you have 100 shares at $17.50. The price of the stock's $28. You could easily go online the next trading day and sell your stock. Okay? Your options contract will not be executed if you're wrong. Say Tiger goes down to $10 or $15, anything under $17.50. My option contract's expiring May 21st. On May 21st, the stock is at $16. My option contracts are worth $0. Nothing. So obviously, I don't like to hold option contracts to the last day, but I want to get max value. So as long as I'm in the right side and I buy in at $2 and my option contract goes up to 3 or 4 or 5, I'm playing with house money. If I decide to sell 1, 2, 5, 10 contracts and take my initial investment off the board, which I sometimes do, then I'm playing entirely with house money. I've done that before with Tesla because it's dangerous. If you like what you're hearing, please subscribe. I know we have like over 1,000 members. We've only been doing this less than 2 weeks. So, I mean, something's happening. We do everything organically. If you're watching this video, I don't do any marketing. It's word of mouth. I speak the truth. I'm transparent. I apologized the other day because I couldn't figure out why I was getting the market wrong. I'm so glad I was correct about my call this morning and that we'd see that dip real quick, but then the market strength was there. The demand was there. And then I told you guys, again, if it dips, don't worry. So somebody wrote, lunchtime dip, everything's on sale. Yeah, everything. I saw everything I needed to see at the end of the day. There it is for you right there. There's tweet. I mean, it's not showing you the end of today, but it's showing you my tweet from this morning. With that said, I was worried around 2 o'clock because I said the market could go down. History repeats itself. So Friday, what was it? Thursday, Friday was okay. Monday and Tuesday, the market dipped and then dipped lower. There was no recovery. There was no V-shape, U-shape, W, no letters. It was a slash. It was crap. It sucked. So today at 2 o'clock, I'm thinking, man, psychology of trading. So I speak about on my platform, psychology of trading. It means why are people buying when they're buying? Why are people selling when they're selling? You have to think of this. You have to ask yourself, why is it a good time to buy right now? Will other people want to buy 10 minutes and 20 minutes from now, driving my stock price up? So there's a reason behind everything. When things are going down, we look for the bottom, which never happens. Now I understand there's a double bottom in the morning usually. So that's what I'll be looking for tomorrow. If we can see a morning spike, that's great. I'll be looking for a quick drop and then another drop, and then I'll be buying. So we've been seeing a double bottom. History repeats itself. So I was worried history was going to repeat itself around 220 today, but it didn't. And the market got stronger. And I looked at certain stocks, and all of a sudden there were buy signals. I looked at AI, which I was still upset about because I still follow it. I still own the stock. I looked at AI. I looked at another stock. I looked at like 3 or 4 different stocks, and there were strong buy signals. So yeah, the market is frothy, but it's okay to ride momentum higher. Okay, so back to options. Let's talk about puts because somebody said, I don't know why I would talk about puts on a green day, but let's talk about puts, okay? Puts are the opposite of calls, okay? Oh, sorry. Let's go to call. Let's talk about puts. I don't want to talk about spreads. There are certain things you can do. You can buy an option, sell a higher option. It's going to confuse you guys. So I'm talking about going long calls if you're bullish on a stock. Hey, I like this stock. I like whatever it is. I'm going to buy a long call, okay? You're not selling a call. If you sell a call and the stock goes through the roof, you could lose your shirt. You have to make sure you're buying a call, okay? Or if you like a stock to go down, they came out with an offering like Futu or QS or anybody else that knows an offering. DraftKings has done offerings. Neos has done offering. Anybody has done offerings. So if your stock, you hear after hours or you just monitor the wire and you hear about an offering, this stock's going to go down. Almost in all cases. I said 99%, and I thought private placement was something different, and it didn't really affect the price. I was wrong. Private placement sucks. When a stock does an offering, it means dilution. It means it's going down. So let's use that as an example. You want to buy puts on a stock. They're doing an offering. We'll mention Futu, which is the opposite of Tiger. So how ironic. They're on both sides of the curve, heads and tails. I do like Futu. I think it's a great price right now. So please don't mistake my example for me not liking the stock. I think it's bottomed. I think 130 is the bottom. That's the offering price. I don't know where it is. It's 131, 132. Okay, so Futu, let's use an example. On Monday, it went as high as, or whatever day it was. Yeah, it was a Monday that was 175, and then they announced their offering. Or maybe it was Friday, it was 175, and then they announced their offering. Whichever day it was, they announced their offering. The stock opened the next day at 163. I told you guys stocks go below their offering price. I think their offering price was initially 150. Then they readjusted it to 130. That's why the stock tanked. That's why it didn't bottom at 150. That's why it went to 137, 132, 130 maybe even. Okay, so you think a stock is going down. You're buying an option, a put option. So again, you're buying a put option. I never sell any options unless I have a lot of stock and I want to make some side money. So you're never selling an option. When you're long a stock, or you're bullish, you're buying a call. When you're short a stock, or you think it's going down, or you think it's overvalued, or you think the market's going down, or you think something's going to drive that stock down, a report, you heard news, you heard a rumor, whatever it is, it's okay. You don't always have to be bullish. People think I'm always bullish. I'm not. I want to make money, and we were in a bearish trend. Now we're in a bullish trend, okay? So what are you going to do? Well, you need to buy a put option. So the put option is an option to sell 100 shares at whatever strike price you are. So when Futu was 170, say I knew I had inside information, there was an offering coming, and I'm like, okay, I'm going to buy one put contract. So the option to sell 100 shares at $170, where the stock was 170, 175, and I'm going to pay $5, let's say. I'll choose May 21st because that seems to be a consistent thing. So I have until May 21st to sell or exercise my option. So I think it's going down. It's $175. I buy one put contract. I pay, make up a number, $800. Okay, it says $8, but you multiply it by 100. So the one contract cost me $800. So please, you must have $3,200 set aside for this position if you follow my rules. Because this one contract is costing you $8. If your value goes down, you need to be able to average down. Okay, so you have yourself till May 21st. You say it's going down. Your option strike price is $170. So you have the option to sell 100 shares at $170. It doesn't matter who you're selling to. Somebody is selling you the put option. Whoever's selling you that put option, that's who you're going to sell 100 shares to. You don't care. So they're like, hey, who's selling me this call option? Who's selling me this put option? It's individual investors that own stock, or they don't own stock. They're doing an uncovered, call or put, which means they don't own stock. It's totally naked, they call it. I call it uncovered. So here's what you do. So I have the option to sell 100 shares at 170. It goes down the next day. Futu does to 150 or 140 something. So right there, my option becomes worth, instead of $800, probably $3,000. Okay, it's been at $8. It becomes $30 a contract. Then I say to myself, okay, what if they say the offering isn't going to happen and they need to reduce the price even more, which is what they did in this example. It's happened a few times to these Chinese companies. There's just not a demand for them. So they do an offering, goes to 150, now it goes to 130. I had the option to sell 100 shares at $170. Now it's 130 and there's still more time. So now I'm making $40 or $4,000, right? So my contract is worth $40 plus the additional time because I still have 30 days left. So maybe it's another $8. So now instead of $800 that I put in, because I was right and the stock tanked, I now have $4,800 value. Okay? So you can make 600%, something like that. Now, if I'm wrong, if I buy a put option, the stock goes up. Guess what? The stock goes north of 170 by that time. My put option becomes worth $0, just nothing. So again, you don't have to hold any option till your expiration date. Someone said, hey, I'm going to hold this till May 21st. Do I buy the stock then? No, you don't have to hold it. You could be in an options position for 5 minutes, for 40 minutes, for 4 hours, for 4 days. You could be in an option position for 4 weeks. There are options. You could buy options for July or whatever. You could hold on to for 4 weeks right now. And then 4 months, you could buy an option that expires. It's called a leap option. So you go out to January 2021. I'll give you an example again. I'm going to go back to Tiger because I have it open. And I'm going to go out to, the furthest it goes, is December, which is 240 days from now. So it's basically a leap option. Leap option means you're going to the next year. But let's just say I go out to December because that's as far as it goes right now. The stock is at $18 right now. The cost to buy a $17.50 option, which means the cost for me to purchase 100 shares at $17.50 in December is $6.50 times 100. So the one option would cost me $650. Now, say I'm right about Tiger. Say it goes to 28, then it goes to 35 and 44. And by the end of the year, it's $58 per share. Okay, $58. Actually, say $57.50 just for math's sake. $57.50. I have the option to buy it at $17.50. It's $57.50, meaning there's a $40 difference. Okay, so my one option, okay, that I paid $650 for is now worth $4,000. The difference between me buying at $17.50 and selling it at $57.50 is a $40 difference. Multiply it by 100. That's $4,000. So basically, you're investing $650. It's worth $4,000. So let me tell you what your max loss can be. Okay, say you buy a call option for $650. Your max loss can be $650. Your option can be worth $0. Okay. Say you sell a call option. Let's not even confuse you. All right. Say you buy a put option and the stock goes the other way. You're thinking the stock's going down and the stock goes up and your option becomes worth zero. It's just whatever money you invested. So I know Robinhood has this thing like max loss, blah, 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 blah. You can only, if you buy a call or buy a put, again, not sell, just buy a call if you think it's good. Sell a call if you think buy a put if you think it's bad. You can only lose what you invest. Okay, there was an incident on Robinhood. Some kid thought he was down $700,000 and he killed himself. It is sad. They are to blame. He was uneducated. There wasn't YouTube or videos explaining these options to him. So hopefully you understand. If not, please ask me on the side. Please understand options. Options are dangerous. Since I talk about them, I'm not saying please go into them, but I know everybody likes to make money and they like to make quick money. 10 years ago, stocks, if they moved 0.5% a day, it was great. If it moved 2.5% in a week, it was fabulous. All right. Today, you guys want to see a stock move 10, 20% in a day, 50%. Low float, low float, short squeeze, blah. This never happened. There was never such market manipulation. Now, I talk about market manipulation in another video. So we're almost up to that. We're almost up to the questions. Just trying to think. If I missed explaining anything, please let me know. Options are dangerous. So I don't want someone saying I sold a call. So real quick, selling call is you're selling the call, you're getting $6 or $600, and the other person has the right until a certain date to buy 100 shares. Well, what if you sell a call at $20 and the stock goes to 100? You owe this dude a lot of money. You probably your account would be margin called because you have to come up with the difference. You'd be like, oh, and you probably have to sell it at the interim, and you'd lose all your money. And you're like, I thought I was buying a call and I sold a call. So the stock went up, you thought it was going up, yet you lost all your money. So it's huge. If you don't understand options, watch this video again. I think I did a good job explaining it. I really did. I tried to simplify it. I tried to use only long positions, long call or long put, meaning you buy a call or you buy a put. Buy a call, it's going up. Buy a put, you think it's going down. There are other things you could do. If you own stock, you own 100 shares of like Apple, let's say. Okay, real quick example. You own 100 shares of Apple. It's $132. You sell an Apple call. Now, again, you have to own the shares in most cases. You sell the Apple call, strike price $150. So if it goes to $150, you still have 100 shares. So you make that $18 difference from $132 to $150. So you make $1,800. So you're happy as a lark. And somebody's going to pay you for a chance that Apple's going to go above 150 to like 170, 160, whatever. So maybe they're going to give you $2 per contract, and you're like, that doesn't sound like much, but it's $200 extra. So if you have 100 shares of whatever it is, now I know people, know that I held on to my Mara. I sold my options, but I held on to Mara because I just wanted to see what the ride was like. I mean, I could have sold it. It wasn't that important to me. I know where Mara is going to end up at the end of the year. But my point is, what I was doing along the lines, because I have, 300 shares, I was selling options along the way. So I was probably selling options to some of you. I chose right at the money because if it sold at the money, at least I was making a nice profit. But if it was going down like it was for 40%, I was selling at the money and it was going down. I didn't have to worry about anything. Okay. Please, if you like what I'm saying, you want to hear more, subscribe to my platform. If you like what I'm saying and you want to see my videos as they're released or be notified every day when we go live here, please click subscribe, push the notifications. Okay. I do this because I have a love for this. I have a love for teaching. I never did this because I'm getting sidetracked. All right, let's talk about stocks. I've got my phone here. I want you guys to talk about whatever stocks you want. You can put more information if you want. You say, hey, what about this stock? What about that stock? What do you think of this? I'm going to look at the chart, okay? Please. So please let me know what stocks you're thinking about. Let me just see. Can I scroll down? I can. Look at this. Excel options for me. Well, we'll talk about Excel because I don't want to talk about specific options position. Again, I trade through transparency. I sold my Excel, but I mentioned that I saw a huge demand for Excel, and that's why I was so confused. It went to $6 yesterday. But again, I don't control the markets. I can predict the markets. I can be pretty accurate sometimes, but I don't have control. And the institutions, they have control. And the government, it has control. It can announce a fiscal policy. It can tank the markets. It can announce another policy. It can make the market spike. Institutions can trick you. They can make it look like one thing, and then they just sell into it. And they can all do that at the same time because they think a certain way together. It's amazing how institutions run together. So let's look at XL real quick today. Let me just find it here. Okay, we're up 11%. We're up after hours, but let's look at volume and demand. Okay, volume was intense. For XL, usually comes in, the average says 10 million. I recall it coming in somewhere between 8 and 9 million lately. So seeing a 13.6 million volume and the stock spikes 11.6%. Right there, it's telling me there's demand. Volume was increased 50% day over day of what I see. People weren't selling and taking profit like they usually do with this stock. If you see a spike, it goes back down. So let's look at the chart real quick. Let's look. I like to look at the 1 month chart, which I've explained before, which tells me the volume. Again, I've seen better volume days, I guess, but this one is the second strongest volume day in about a month. So that's pretty good. And the one other volume day that was extremely strong is when XL actually spiked, but it was more selling than buying because it spiked and people were unloading their bags. Again, this is a SPAC. I spoke about SPACs. I mentioned I don't really like SPACs. How do you truly value a SPAC? Again, for platform members or people that follow me on Twitter, that's what I talk about. True valuations. If you can't value a company, how are you supposed to invest in it? How do you know if that's a good price? Coinbase. How do you know if $382 was a good price? It obviously wasn't because it was like $328. Maybe it's like $333 now. I think Coinbase will go to $500 because I think these other companies are going to do well as $311. So yeah, the institutions are selling Coinbase. I tweeted the other day, the president, the CEO, they're all selling Coinbase. So let me see if we have any other stocks up here. I know I told you guys to weigh it on the stocks, but please type in some stocks if you'd like. Let me just see. I know you guys are just being overly kind to me. Palantir. There we go. So yeah, Palantir I mentioned a couple days ago, and I was shocked that it went down yesterday. Again, I was like baffled. I thought I was calling the bottom. I know that ARK has interest or an investment in it. Palantir has been so beaten down that what you saw today and the fact that, again, Palantir, XL, if your stock held on at the end of today and looked good at the end of today, you should definitely look at the volume, but that's an excellent sign. Now, if your stock tanked at the end of the day a little, and I'm not saying it had to tank a lot, you could be up like 7%, but at the end of the day, you're only up 4%, and you look and that happened within like the last 15 or 20 minutes, that's probably not a stock I'd want to be in. There are people that were taking profit, and when other people see one person take profit, let's take another profit. Okay, here we go. MP. Now, I knew about MP because someone mentioned it at $33. It's like a materials company or something like that. What is it? Yeah, Materials Corporation. Oh my God, it's at $29. So let me tell you about MP. There's a chick that I follow on Instagram. She's hot. She's like a trading chick. That might be her name. She's got 4,000 followers. I look at the pics she makes, and they're terrible. It's just it's ridiculous. I'm amused because she made an NFT and somebody bought it for $4,000. I charge my followers $3.49 to get my insight and for me to share information. She's putting an NFT. Granted, good-looking woman, and not being offensive. Most of her followers are men. Most people that trade in the market, it's a male-dominated market, and it's not right like that. It shouldn't be right. And everybody has fair play to the market. But the point is, she's got these followers. She has, maybe 20,000. She sold an NFT for $4,000. It is crazy. So anyway, MP, she liked that. She liked another stock, EVM or something like that. I don't know. She's talking about ladies, and ladies need this, and blah, blah, blah. I don't know the stock. I don't deal in penny stocks. It's not a penny. It's a dollar stock, but I don't deal in that. I couldn't put a valuation on it. I stay the heck away. I do listen to what other gurus are saying, but I'm not like another guru. I don't listen to them for stocks. I just want to see what the heck they're giving out. Now, the good thing about MP today is there was finally demand, which means, oh my God, it was as low as $26.67. So this guru was giving it out at $33. It did spike to $35, but how volatile is that? So somebody puts you in a stock, it goes up to 35, you're feeling good, they probably unload their bags, and then you're holding it at 26. You get in at 33, it's 26. What is that, $7? That's like 22%. Please, people, do your due diligence. Again, I don't talk about a single stock. If I'm not invested in it, I won't talk about it. You want to hear about stocks? I'll tell you what I'm reading in the chart, but I'm not going to say, oh, yeah, this is a good one. Go play it. I get in first. You guys get screwed. That's not what I'm about. That's not what trading's about. Trading's about making the best decisions, finding the best entry point, finding the best exit. Okay, let's go into another stock. Okay, SRNE. I've told you for days.
I'm at 6%.
For 3 days that. Oh, hey, Carlos, how are you? Hey, that's Carlos. That's my operations guys. He's working on stuff on the side. Great guy. But we're going to leave him so that we can talk about Sorrentino Therapeutic here. Okay, so here's the news. Yesterday, I mentioned we saw 5 straight demand days, which means more buying than selling. So yesterday was the first day. And I don't know what happened yesterday. I guess maybe it fell yesterday. It looks like
I logged into the phone and it immediately put me on the screen with him.
There was buying. It's following the pattern. I still love this chart. I'm looking at the 1 month chart. It looks unstoppable. I gave it out as my alert a couple days ago. I mentioned this already. I'm at $7.59. Let me just see if I can turn him off right now. Mute the mic. Okay, let's look for more stocks. Airbnb, okay? I didn't know the symbol, but I don't really like the company. Again, I don't know the valuation. They went public. They obviously made some money. Let's see what it looks like. 3 month chart. Okay, as high as 216. Seems to be 215. That seems to be the high point. Yeah, it could drop further. I'm just looking at it. I don't know if you want no volume or all that stuff. I'm just looking at the bigger picture. So if I see the bigger picture and I say this is not what I'd be investing in right now, then there's no reason to look at volume unless you're thinking about taking a put option. And I wouldn't take a put option unless it was $190 because that looks like a top. We only buy put options at the peak. We only buy call options at what we consider the bottom. Again, put at the peak because we think it's going down, call at the bottom. Okay, Mogo. Now, I've heard people talk about Mogo for some time. In Canada, it has to do with something. I don't know the company. So again, I'm only reading the chart. Because the person told me it was going to be good at $10, $10.80. Dude, watch Mogo, watch Mogo. Then I saw the next day it peaked at like $11. And I'm like, oh my God, maybe I should have watched Mogo. I don't even know what Mogo is, but let me see it. Anyway, it's at $8. It was as low as $6.60 today. It was as high as $8.50 today. Okay, so that's just common news. Yeah, so what are we seeing? There was definitely a lot of demand today, no doubt. 6 million, that had to be over the average. Yes, the average is 3.87. I can tell you that because I'm looking at the other days, and today was a heavy demand day. So let's real quick just talk about the psychology of trading. So a heavy buying day, okay? These people are either entering to Mogo for 2 reasons, 1 or 2 reasons. They're going to flip it. They were just doing a momentum trade. It's up 18% today. Or they really like it, and there was that much demand because the stock is going higher. So you know what? Boom, it's starred. It's now on my list. To me, it's an $8 stock right now. If I'm right about Mogo, now what happens when any stock pops 18 or 20% is there is profit taking. So if I'm right about Mogo, no matter what happens in the market tomorrow, it will likely go down. If there is profit taking and if there's consolidation. Consolidation means you hit a new high or you spiked up and then you have to consolidate down to a point. So you started down here, you spiked up to here, then it finds a new baseline. So any stock that spikes 20%, 25%, 50%, let's talk about Romeo Power real quick. When it spiked 60%, I gave the alert. We're getting out at $12.90. $12.90, we're getting out, $12.89. We're out, done. It went all the way down to $9. It might have even hit $8 and change. I don't watch it. When a stock is off my watch list, I don't pay any attention to it anymore. Okay. Tesla. Yeah, I mean, Tesla was, okay. So Tesla does head and shoulders. It goes between $700 and $800. I wasn't sure about it until I saw it at $698 this morning. Thought about jumping into Tesla options. Know that I'm 5-2 versus Tesla, and I don't want to ruin that record. But I would have been long Tesla. And I think it moved. It went to 707, and I was still thinking, God, is the market here 707, 708? Maybe it won't move with the market. The market's higher. And then I think Tesla closed maybe at 725. Let's give you a real accurate number, actually, since we're talking about stocks, and I don't want to mislead anybody. Okay, Tesla, 744. Okay. There wasn't any more demand than usual. Looks like it traded about the average volume. Yeah, 29 million. 33 is the average volume. I wouldn't be in Tesla. I stay away from Tesla. Any stock that Kathy Wood has, she's got a lot of shares or something. If the market turns and she needs to unload something or a position, Tesla is too volatile for me. Will it go up? Yeah, it'll probably hit 800. I mean, who the heck would be buying Tesla at 744, especially after one of their cars supposedly killed someone? Elon Musk said they did not. He said it wasn't autopilot. The news says it was autopilot. I don't know what it is, so I'm not claiming to know anything, but I'm saying I'm not sure I would invest in that stock at 744. I always look for risk versus reward. You limit your risk side, so you limit your downside or the money that you can lose. And I lost $500 in my small account challenge. I think we're probably doing better now. I think it's at 15. No, I think it's probably still down $500. So yeah, there's always a risk, but I limit my downside. If I was playing any other options, I could have in the last 2 days lost 80 or 90%. With this, it's risk, limited downside, reward, a lot of upside gains. So Tesla is not where I would be. But let me see. We got some. Yeah, I mean, they can come out with news and deliveries and this, but for Tesla to be a true valued stock, right, and go to like 2,200 or 3,000, like Kathy Wood said, they need to perform on point for 10 years. 10 years, no accidents. 10 years, superior technology. 10 years, great ingenuity. Yes, if Elon Musk comes up with some type of other power, solar power or hydrogen power, guess what he's going to do? He's going to spin it off. It won't be Tesla. It'll be Elon Musk. It'll be like, he'll come up with a funny name like he named his kid. So it'll be like symbol solar. You'll be like, oh man, I got to invest into, he's got a company. That's what he'll do. If he figures out a great alternative power, he's got all these companies. He's building something under Las Vegas. He came to Miami to talk to the mayor about building some type of platform. He's a smart man. He's a genius. I follow him on Twitter. I don't follow many people. I follow a couple of comedians and Elon Musk. So with that said, I like him. I just think it's a valuation. I don't want to go into Tesla at 744. If I got in at 698, that'd be great. Let's talk about Virgin, because I almost got on yesterday and I was going to give Virgin out as an alert. It was $21 flat. I see it got beaten up. I saw there was demand. Yes, so space, right? Richard Branson sold. I made the mention of that. His CFO sold a week before. I made a mention of that. The stock was as high as $56. It went to what? $20, I think, right? $20 yesterday. So $21, I almost gave an alert. I saw strong buying. I saw like institutions or somebody was jumping in pretty heavily. And I was like, I'll give an alert. It'll drop. The market was tanking on Tuesday. I don't want to give an alert. I mean, I felt so scared to give an alert out because I didn't want to be incorrect. I told you guys I'm not going to give 75% alerts out unless I'm sure about a company. So if I'm sure about it, it was great, but I didn't want to give it out at $21. Guess what? If you want to play it, do your own due diligence. I don't own Virgin. I don't own Space. I don't own options in that company. I'm not thinking about buying a position. I'm not thinking about buying options. It doesn't matter. I think the company's going to go up from the chart. Again, if the market tanks 15%, that company will go down. It'll be like $19. However, there is strong support. I saw it yesterday, even when it was selling off. I saw it today. I don't know where it closed at. I saw it went over 22, which is 5%. And I was like, I could tell them that I was going to give this out yesterday at $21, but that's stupid. It's already at 5%. The worst thing that could happen is someone could jump on and be like, dude, Matt talked about Space. I'm going to jump on Space. It's $22 now, blah, blah, blah. And then it goes back to 21. And I'm like, great. Again, now we lost 5%. So I did not want to give out Space. Again, do your own due diligence, exactly like it says here. But I like Space. I don't have a position. I haven't even thought about taking a position because I saw it get so beat up, and I think it's heavily shorted. Ebon, the shorts are gone. There are people that hate the stock, and there are people that probably own the stock and hate the stock and probably are playing the other side. But I have a big bag of Ebon. They tricked me with the offering, then they reduced the offering price, and it's a Chinese company. Now they're talking about mining Dogecoin or whatever it is. That's not what they're known for. That's what new traders know them for because they got tied into Dogecoin. So Dogecoin goes down, people are selling their Ebon. That's not what they do. That's not what they have a trading platform. Ebonics or whatever, they trade all types of crypto. Yes, they mine some Dogecoin, but that's not what brings in the bucks. They weren't mining Dogecoin at 4 cents, knowing that it would go up to 30 cents or it could go north of $1. I mean, there are companies using Dogecoin now, so it would not surprise me. Now, you guys speak about another type of coin, Space Moon, whatever. It's a fraction of like I don't even know. It was 0.0000009, and someone's like, yo, I made 100% in Space Coin or whatever it was called. I stay away from that, okay? You might make thousands of percent, okay? Risk versus reward. I don't know what it is. I don't have the time to learn what it is. Oh, that's silly. He doesn't have the time. What do you mean he doesn't have time? It's going to be great. It's going to go up thousands of percent. If it does, it's great. It's speculative, okay? We talk about options are dangerous. Some cryptos are very speculative, okay? I invested in a couple different cryptos. Again, it's more for me about seeing the charts, and I picked certain cryptos that would help you hide money or help you do certain things that I thought there would be demand. And I was right. I made like 30%, I made 28%, I made 15% and 17%. Again, these are more secure crypto plays. You're like, oh, you made 17%. Yeah, I didn't get in 3 years ago. I got in like 3 weeks ago, and I was out 2 weeks ago. Or I was in for 2 nights, or I was out for 1 day when Bitcoin, all the cryptos tanked over the weekend. I mentioned 2 cryptos, SAND. I made like 18%. And the other one was, I call it Story, but it's STORJ. And I made 15% overnight. And then you know what I did? I announced on my platform I was buying Dodge at 30 and a half cents. And I bought Dodge. And then I sold Dogecoin for 41 cents. So, I mean, the return right there, I think I did the math. I forgot what it was. I maybe my numbers off, but I made 120% in like 3 days. So it's not about me. It's about turning small piles into big piles. Somebody told me the other day, I talked about MSTR, and the person bought MSTR 1 share after they made money on Dogecoin over the weekend. They bought 1 share at 622, and they sold at 644 yesterday. Texted me on the side. I retweeted it. I thought it was great. Anybody that can take small piles and turn them into big piles. People say to me, I have $1,000. I can't make any money. Dude, you can crush it. Just do the right thing. If you have FOMO, I mean, there are certain things I talk about with stocks. There are 30 million new traders out there. Whoever taught you guys to buy the ask? I don't know. Whoever taught you guys to have FOMO, fear of missing out? I don't know. I mean, you guys, the momentum, the stock's already up here, and you guys are jumping on board. I mean, what happens? You get stuck holding the bag. GameStop. Probably $60 stock. I know people probably hate me for this. I'll get like hate mail. Hey, GameStop, you don't understand game. I don't understand GameStop. That's what they'll tell me. What I do understand is valuation. Okay? What I understand is where the stock price should be. It's where it is as if they did this online presence and they have all these people that subscribe and they're releasing games and they're getting income and generating revenue. Maybe they have these tournaments. I mean, in a perfect world, yes. Then maybe you get 400 out of GameStop eventually. Maybe it's worth, 20 billion, 25 billion, but it isn't worth that today. So you're going to ride AMC to the moon. AMC is not going to $1,000. You're not riding it to the moon. It might go up. There's a reopening play. You see my head? It could go up. You hear me talk about AMC was worth $6. I'm not saying that anymore. I haven't spoke badly about AMC in a while. It could go up. Movie theaters are going to reopen. I don't know if I'm going to see a theater, but I went to dinner the other night. I went out and I said to myself, I would go see a movie if it was open. I mean, I got vaccinated. There's not, it's the point is, I don't know what's going to happen with AMC, but it's not as bad as I thought it was. Let's keep going. Boeing, I stay away from because airlines, I don't really trust airlines and Boeing, a long-term play. Facebook, I think I can just talk about this real quick. I mean, I'm just talking about these stocks that I know about right now because I'm running out of time. We're over an hour. Thank you guys so much for staying with me. No, I'm kidding. So let's talk about Facebook. $390. That's my price target. I think it's going up 30%. If it takes a year to go up 30%, congratulations. You just made a safe, long-term play. Yes, do your own due diligence. I own Facebook. I own Facebook at $301, $297, and $307. That was my first buy. Then I bought the dip and the dip. I'm happy. I'll sit with Facebook. Now, I heard the employees of the company don't like working there when compared to the other FANG members, Apple, Google, Netflix. So I heard their employees rated their company the worst out of the ones to work for. And that usually shows in a stock. But Facebook, they're so good. They make so much revenue. When you hear companies talking about Facebook ads and this and this, and they just have so many. I get some people don't like Facebook. Some people don't like Twitter. Did you guys not like YouTube? Isn't YouTube owned by Google? You guys like YouTube, don't you? All right, so you're here. So you like YouTube. I like YouTube. I like it better than everything else. This is the best video right here. We got an hour. It's awesome. I'm so happy you guys are here with me. TRIT, T-R-I-T. There's huge institutional demand there. It's been there forever, but institutions are not going to push it up. They will give you such support. They gave support at 650, at 688 when I first entered into TRIT, which was a long time ago because I was thinking that there'd be a short squeeze. No short squeeze. The shorts are out. There still are short positions, and maybe they're buying back, and now they're seeing what you see because the volume is so light. If I was going to manipulate TRIT, I could probably push it down. But again, I don't think it's being manipulated anymore. I'm waiting for the earnings, which I've been waiting for like 3 months since February now, right? We're almost in May. First or second week in May. I think when they come out with earnings, they're going to say something like And here's what I like about trading. I'm going to give you some numbers right here. The second quarter of last year, I think they had 36 customers that traded an average of $94 million per month. Then the next quarter, they had 93 customers that were trading 154 million per month. So you see the number of customers almost doubled, and the amount that each customer was trading, a customer could be a firm, a hedge, whatever it is, went up like 50%, okay? So what am I expecting? With the volatile markets, the craze, 2021, we peaked in January, February. I know these are quarter four numbers that we're talking about, but volume was spiking. Volume is spiking. That's good. They're making money. These companies like Tiger and Futu, they're like brokerage houses. So the more volume increases, the more people are getting involved, the more traders there are, the more money they're making. That's how I know. So I'm expecting numbers to come out where like they say something like their customer base has increased like another 40%, and the amount the customers are trading has increased, 5, 6, 7%. They're up to 170 million per month, whatever it is. I think the numbers are going to be good. I think institutions know that. So institutions have been buying and showing support for quite some time. You will see a dip, but that's them saying, we're not buying into a shitty market. The Nasdaq's tanking. I don't have to show support at 750. I'll buy it at 718 tomorrow. And that's what they did. I don't know where it finished, maybe 757. We see it at $8 all the time. It spiked up past 8. There are bag holders. There are people that use, will get out or something like that. But I'm going to ride it. I'm going to ride it up past $10. I've been saying that. And you know what? If I can wait 3 months, I can wait 6 months. And if it takes 9 months and it's November, then I better get $20 out of the stock. Again, if it's going the right direction, and I've been through the pain, this is the lesson I teach. If you've been through the pain, wait. Be through the pleasure, okay? Enjoy. So you spent 2 days suffering through shitty accounts Monday and Tuesday, for instance. Let's say you enter into a position today. Did you sell already? If you did sell, you're not enjoying the ride. Now, I do tell you guys, take profits. I take profits. However, today, the way today closed at the end, it was strong. And if it sells off tomorrow, I'll go on record right now. It would shock me if it sells off tomorrow. It would just be crazy. Futu Momo trading platform, Momo. You're a Momo. Oh, is that the dude that left my platform? Good. Thank you for leaving my platform, bro. I truly appreciate it. I'm so happy you left my platform. Oh, I wish I could go live with you or something like that. But instead, guess what? Knock, knock. Knock, knock. Oh, you're blocked. Okay, so again, that guy, and I'll just tell you probably what happened because I can assume, right? Somebody thinks, oh, I'm going to join this platform. I'm going to get free stock picks. I'm going to get this. I'm going to get that, whatever it is. I teach you guys how to be better traders. I show you guys what I see in the markets. I tell you when I'm purchasing a stock. So, yeah, I mentioned Futu. Futu did an offering. I told you I thought it would drop 9.5%. It dropped 9.5% pre-market because I did the math. I should have been smarter because they could readjust their price. So instead of buying puts like I suggested that I should have, because every time that I hear an offering, I actually go and buy puts. I said, you know what? I gave this stock out. I like the stock. I'm going to double my position. So, yeah, I doubled my position. I bought another 100 shares at $151. I'm transparent. I don't care. He wants to call me a Momo, whatever. Who cares? Who cares? I really don't care. So, I mean, there are going to be haters out there. There are going to be people that do the wrong thing. One guy was following, and one day in public Twitter, because there was no private platform, said Zoom. And he said, I just put all my money on Zoom. And it went from like $2.03 to like $2.16 that day, right? And I was like, all right, this guy broke the rules. I showed him an example. I said, it's working for him. The guy's up like 6 or 7% since he did it, but he's breaking the rules. And what happened? What happened? Zoom went down. I sold Zoom at 161, 260, whatever it was. Yeah, 161. And I think it went down to $1. So we spoke about Sundial. That went down. Castor, Maritime, something like that was at 50 cents. There's so many. Naked Beverage, right? All these stocks that you guys, or sorry, not you guys, retail investors or investors that before they found a platform like this just would hear news. Oh, Sundial's going to 2. Oh, Naked Beverage is going over 1. Oh, there was a company called Top Ships and other stuff like that. It's amazing. Magic Car. Oh, yeah, please. Anybody that follows anybody, if they're talking about any of these stocks, Sundial, GameStop, okay? Now I'm getting like agitated by this. You should not be listening to these people. There's a guy on here, and maybe he watches my video. Chris Sane, all right? Guy's got like 500,000 followers. And I said this when I saw it 3 weeks ago. And he was talking about buying puts on NEO. And I looked at the NEO chart, and I was like, this is a couple weeks ago. There was demand there, right? So I'm like, there's demand. I'm seeing demand. Let me see when he did this video. It came out here, blah, blah, blah. I'm like, NEO went up and there's demand. Oh, NEO went up the next day. And I'm like, how does this dude have 500,000 followers? It just astounds me. It's amazing. And there are other people out there. Hey, get on the bandwagon. And they talk, and there's a nerdy dude. And again, I don't discriminate. Anybody can have great knowledge, okay? I liked some guy that I met, and I thought he had great knowledge, but he couldn't disseminate it. He could not explain it to you. He could not show you what I'm seeing. Okay, I keep it simple. I show you the volume. I show you the demand. I want you to see it. I'm not teaching you to fish. Oh, sorry, I'm not fishing for you, right? I mean, it's late. I'm teaching you guys to fish, and I'm teaching you how to be better traders. And if all you get out of all my lessons and all this time is to how to get a better entry point, how to plan accordingly and have a strategy, right? Have an exit point. Secure your exit point and plan ahead, right? Right there, just buying a cheaper stock or getting max value on it, whether it's options or stocks or whatever. This is it. Light bulb should go off. If you haven't figured it out, you should figure it out. It's crazy. Yeah, people on my platform, some people, it's all about timing. But if you look at my trades, again, I'm not trying to tout myself here, but my options trades, I'm probably like 75 or 80%. And the last 3 or 4 were red. So figured I was like 16-1. Now I'm like 16-4. I have 2 positions open. The point was I was killing it. So yeah, I was bad on timing for like 3 days. I was confused. I couldn't understand the market. But I'm so proud of my prediction this morning. I was so nervous. I shouldn't get nervous. I can predict anything. I said the moon is falling. If it doesn't fall, I'm still alive. You're still alive. We still have money. We still have the same positions. The point is, I don't like to be wrong. I don't like to share information that I see and have it go the other way. It's not about being bullish or bearish. If we're going down, I'm telling you we're going down. Yesterday, Tuesday, I saw the market was capitulating at 10:15 a.m. and I alerted. I said, 10:15, I'm selling all my options position. Maybe it was 10:21 by the time all my options positions sold. The point was, we got a rebound today. I don't have those positions. I err on the side of safety. I show you guys what I'm seeing. So I said the market was tanking and it fell off a cliff. I was right. I don't know what's happening the next day. I don't know what's happening the next day. After that. You know what I'm saying? I can only tell you what I'm seeing. And Carlos is definitely trying to get in with me here. Not going to let that happen. Ford, again, bad freaking timing. Ford's a great company. I really like Ford as a company. It was like if you had a friend named Ford. I like Ford. I hope Ford does well. I never owned a Ford car. I never owned a Ford truck or anything like that. But please, Ford, the chart looked great. The demand was there. I saw the demand. It just sucks when they take $1 away or 10% or something like that and your timing is bad. If we got into Ford this morning, the options I was looking at, the $11 options, I mentioned this earlier, I think you could have got it for 21 cents or 28 cents or something. You could have sold them as high as 70 cents. I'd still be holding on after today's market. Pretty sure Ford will probably see it like 11.90 tomorrow, and if not tomorrow, Thursday. Yes, I spoke about Ebon. I think we got to kill this off soon. It's over an hour, and my voice is going. But you guys are the best. Anybody that's still here, anybody that tuned in late, please watch from the beginning again. You don't have to watch the whole thing. Sometimes I watch my videos myself, which it's not like egotistical. I'm so hard on myself. But I want to make sure it's good stuff. Sometimes I reshoot the videos that I send out on Twitter. Anyway, so if you follow me on Twitter, great. If you're on my platform, great. If you found me today on a different platform other than YouTube, that's great as well. I know you guys are confused. What other platform? Yeah, it's coming. It's coming. I'm sharing this information. I think we're actually, doing some other cool stuff in the works. It's really exciting. I almost let the cat out of the hat. But there are a couple surprises coming up that's going to make the platform even better. It's going to make a couple of different things better. And I was just, this is one. I don't know if it looks a little different today, but we're doing something different, and I'm loving it. It looks better. Please follow us on YouTube. Please follow us on Twitter. You can find me. You can find my Twitter account. We have a public platform for that. If you like what you're hearing, I have a trading account. It's $3.49 a week. What is that, like 50 cents a day? Again, I give direction to the market. I tell you when I see volume. Oh, OCGN, I didn't speak about that stock today. I saw volume this morning at like up 6%. I don't know where it finished up. I really want to look because I know it was as high as like 20% or something. Oh, and last, Oracle. Oracle's at $76.66. I got out at $79 because I didn't like what I was seeing. I saw a sell-off. The market actually recovered today. You know what? Oracle dropped 3%. 3%. So if you're watching now and I said, I'm selling my Oracle and you're why, and I had some seller's regret because the market went up, there was a reason I saw it dropping. Even on a great day like today, it's down 3%. Do I think it's over? Probably not. That was could easily be profit takers. What was I just looking at? OCGN. I just want to see where that finished at. I have no clue. It's somewhere on my list. OCGN. Where the heck is it? 650. Oh my God, 650. Huge volume today. And you know what? The exciting thing about today was, you know how many bag holders were unloading today? It's all outflow. It's crazy. It's outflow. It went up to $6.50. It's outflow. And it's up after hours. Again, I don't pay much attention to after hours. The volume was heavy today. 126 million. Oh my God. Average 57. Yeah, it was so heavy today. So yeah. But again, I jumped in there too soon. What was I? I was at $7.06. I bought an extra 1,000 shares. I alerted. Then it went down and someone said, hey, what do you think about that? I said, there are so many bag holders. So that even when it spikes, there are bag holders. You know what? I still like the company. I still like my position. Please. All right. Today was wonderful. Thank you guys. Have a great night. It was awesome. Thank you so much.